Aloha Internet. Welcome to the Bubbles Stock Market Open Show. It is Thursday, October 23rd, 2025, 8:03 a.m. Eastern Standard Time. Stock market's going to be opening in an hour and a half. Let's take a look at the overall market action of last night in the futures market. We got the dollar moving up a little bit. Gold seeming to temporarily slow down on the downward movement. Same thing with silver, up a little more. Same thing with Bitcoin. Oil is the last two trading candles bouncing back up into the middle of this range that's been in the month after this decline. It's kind of hitting the resistance here around 62. S&P, NASDAQ, Dow Jones, Russell 2000, kind of looking the same, right? We're still in this big drop. We're still dealing with that where we're right kind of in the middle of that still, or you could say middle, upper half, somewhere in there. And the VIX moving up just a little bit. What other things do we have going on this this coming this coming day? What do we have going on? Let's see if I can pull this out here for you. Thinkorswim calendar. Right now I've got it on earnings. See how I can deselect that? Clears up everything. Put it on Econo Day event. And today we have going on Chicago Fed, National Jobless Claims. There's a lot of stuff going on, and it doesn't. Okay, number one, I'm going to admit I'm not the best news and event-driven type of trader. So I'm not noticing anything here that's going to be super market moving. However, again, I'm not the best person at like looking at this stuff and knowing how much impact the jobs numbers normally or jobless claims normally have on the stock market. So could some of the stuff be pretty move the market? Yeah. How much to one side or the other? I'm not sure. A lot of times some things will be sort of baked in. But speaking of jobless claims, just a quick reminder, this is where everything starts. Your personal financials, how much money do you have in all your accounts? So you go through and do that. I already did this for all my accounts, 23, right? You go log in, do whatever, check your things, do your bookkeeping. Do your bookkeeping. Start getting familiar with what your accounts are on a daily basis, and when you have some sort of when when something is spent, when you have a bill, like put it in here. Start tracking it. You can watch it in the summary. There's a lot of different things you can do. Most importantly, though, it's going to start giving you a pulse of your own finances because you can, if you make $1 million in the stock market, but you're spending a million and a half uh, every year, it's like you're still broke. So there's one thing about making the money. It's the other thing about knowing how that money that you're making is flowing through your own, personal financial statement. How much of that money are you keeping? What are you doing with that? So that's where we want to start. Back over here. All right. Sometimes these things are a bit baked in the cake. So maybe the jobless claims will be, we'll see what is going to be reported. But let's see if the Fed has updated their jobless unemployment rate at least. Let's see. No, it's still, oh man, still August. August is the latest update we have over here. But it'll be good to have this number come out. Now, do I necessarily believe this number? Not really. For since I've been alive, 48 years, I kind of heard this thing. How do you know if a politician's lying? Their lips are moving. it was never it was never there was no disclaimer on it. How do you know if a XYZ, this political party politician's lying, or that political party politician's lying? It was just politicians in general. And this information that's coming out is from the government, and so I personally take it with a grain of salt. So if you are saying, are you insinuating that you don't trust the government? Absolutely. That is 100% what I am insinuating. I don't particularly trust the government. Any government, your government, my government, that other person's government, I don't know. Like nothing has ever happened that made me feel like, you know what, these people are really looking out for my best interest. Look what they did for, for grandma. Like, they're not doing that. All right, so maybe we could have some event moving stuff, but even if it's not major, they'll probably move the markets to some degree. Those are good. Maybe we have some earnings. Tesla reported after hours. Lots of earnings going on. What is the date? Today is the 23rd. 165 earnings being reported today. Some before market. Those might have some effect. Before market. Let's see, a lot of earnings before market, and still in the before market. Lots of wow. Okay, now we're during market. Got a few during market and quite a few after hours. Forward. Maybe there's a lot of tickers you're familiar with. And here, I'm gonna have to get better at the whole earnings reports stuff. There was a time when several years ago when I was working on uh, straddling earnings reports. So how would one do that? If you know an earnings report is coming out, which it's pretty easy to know. So like for example, Tesla reported yesterday. So now Tesla's going to report in 3 months from now. So we look down the 1, 2, 3. So it's probably roughly around January where Tesla's going to have another earnings report. Whatever stock it is you're looking for, or maybe you don't look for a stock, maybe you look for a time, maybe you're like, okay, I want to put on a trade in whatever December. So I want to put on earnings trade in December. Who's reporting in December, and then kind of go from there. There's so with a straddle, you're going to on an earnings play, you're going to buy a where here we go. You're going to buy a call and a put at the same time. So there are a few nuances with it. Like when are you going to buy it? You're going to buy it at any time. You need to buy it at there's a bit of a technique to when you're actually putting this position on because you want to put it on generally when there's lower volatility. So I think the easiest way for us to let's see here. October, yep. So January, it looks like maybe towards the end of January. At least that's when it was last time. October, January, yeah. So we're probably looking somewhere around January. Let's just go with Tesla as an example. So we'd be looking to put on this. Maybe this is a little bit too short. It might need to be January 20th. But again, it's something along these lines where at some time you're buying a put and you're buying a call. And what you're hoping for is the stock moves far enough in one direction or the other that the profits you're getting in that direction that it's moving up or down is going to offset the cost of the other option. And yeah, I never fully dialed it in. I don't quite exactly remember why, but maybe it's something that I'm going to start looking into a lot more. So we'll have something to talk about on the Bubbles stock market show. All right, so we have that stuff going on. And what else do we have going on? Earnings. Let's move this back over here. So we see, let's check okay, we see that's not updated. Let's check the MMRI. Up just a little bit from yesterday. Yesterday, I think that was 243. We're at 245, so up 2 points today, but not too bad. Risk has still been systematically going down. Let's check the put to call ratio. Can we check it right? Should be able to check it here. Let's see. Put the call ratio for the total Chicago Board of Option Exchange, a little less than 1. For the equities, around 50.5. But obviously, it's 0.64. It's close to 50, closer to 50 than 1. And for the index, right at 1. So it looks sort of normal right in there. PE ratio still super high. Fundamentals information not updating too quickly. A little slow to update where these charts, technical information updating pretty darn fast. What are things looking like in a pre-market? Anything after hours? Got the S&P 500 via the SPY here. You see we ended the day here and it kind of went sideways to down just a little bit. VIX is rising just a little bit. Oh, my beloved service now kind of going sideways down a bit from the high yesterday of 148. It's around 140. CrowdStrike looks to be dropping down. IBIT and BTCI kind of floated up a little bit, up to sideways. It's floating up a bit. I guess that's having to do with Bitcoin rising, Bitcoin futures rising, maybe the Bitcoin the actual commodity, whatever it's called, is rising. We talked about Tesla. Tesla on the hourly chart been moving kind of down. Had a big downward movement here down to 417.24 after the after hours earnings report, and rallied up a bit and kind of been going down. ASTS is still down here around the 70, rallied up a little bit but coming back down. Palantir kind of sideways here. We already talked about that. Coca-Cola right around 70. So from its high of yesterday, it pulled back just a little bit. Let's see if it's going to be making a support around 70. SMCI kind of doing the sideways thing. FCX, woo, getting some big pre-market movement up. At least big for FCX. Get that big candle. Boom. So this will be interesting to watch today. Today's trading action. Is that going to continue to go up like that? Oklo kind of doing a sideways thing here around 120. MO continuing to go up, and then on the after hours, just kind of going sideways. Gold doing a little bit of sideways stuff, and Robinhood also doing a little sideways stuff. So, what can we expect in the markets today? Well, we is a pretty big thing. What can we expect? That would include you, myself, and a lot of other people. So, I think I should stay away from what we should expect because I 100% don't know what you should expect today. I don't know. I don't know what's going on with your account. I don't know what's going on with your trading day. I don't know. But I can tell you what I am expecting today. I am expecting to monitor my short strangles, which I have on now, trying to get the other end of that. If I don't get the a premium I want, I might just open it up with a lower premium instead. You see, I'm trying to get paid $60 over there at the 850. I had it in order in for 175 yesterday, and I just saw that that wasn't happening, so I started lowering it down to $60. Hopefully, we'll have some upward movement and VIX moving up. Hopefully, I can cash in on at least $60 on the 850 put for 2 days. It'll expire end of business Friday. Technically, it's like Saturday morning when it will really disappear off my account. And but this coming down doesn't look too good. Actually, since I'm trying to go down to the downside, yeah, it would be great if it pulled back a little bit. The whole market pulled back just a little bit, and this rose up a little bit, and then get filled out. Is it showing me where is it at? Over here. Let's go to. We'll take a look. And just as a very heavy reminder, or first time you're knowing, first time I'm telling you this, you should not be doing this. This is not financial advice. This is for education. These short strangles, especially um, on ServiceNow, this is extremely risky. You could lose a shoot ton of money in a very short amount of time. So right now, look at I don't even, there's not even a anything at the bid. I've got there's nothing at the bid. There's nothing. There's no demand there. I might have to move up my strike price. Might have to move it up. I'm gonna watch that and see what happens. But for short strangles, like I think the order of operation should be you practice in a paper trade account and you practice. You can start practicing short strangles if you want. However, what I would recommend is the first thing you start practicing is selling cash secured puts on stocks that you want to own at a strike price that you want because that the skill set of doing that will build the skill set you need to successfully short strangles. With a short strangle, you could do it naked or you could do it cash secured. It does kind of take kind of a takes a much more diligent approach if you are cash securing. And what I mean by that is let's pick a stock that's lower in price. This $935 makes it a little difficult to cash secure. Not definitely not impossible. I'm sure there's some accounts that could, but let's go with FCX just because it's in a more reasonable price. So if we're going to do a cash secured strangle, it what that would mean is that on the short side, on the short side, both are short sides. They both are short sides. All right. So this is 1 year from left to right, 1 day, and a bunch of moving averages on here. And just really quickly, a strangle is going to be selling a call up here and selling a put down here. And what you're doing is you're attempting to sell this higher number and this lower number, and you're doing it in a way where you think the stock price is going to stay between these two numbers. So, for example, I'm not sure if there's any money here, but what seems to be pretty safe is the 50. Now, also, it really depends on the time frame. So, if you're going to say this, the 50, it'd be safe to short the 50 call, but for how long? For one day? For 2 weeks? Yeah, I don't think in 2 weeks. It's, I mean, it's not impossible, but there's a lot of resistance all through here that it would have to get through. And it would not only would it have to get through like this clumpy price action right in here that's not even at 44, but it would have to get past this resistance that's coming in at 42. Plus, you got these two moving averages here. It still have to get over this moving average. And then once it gets through there, it's got to get through this resistance of 44. Then we got all this resistance right in here to get past 46. And then it's still like got this pivot point, right? Kind of pivot pointish right in here somewhere you have to get past. On the downside in 2 weeks, probably probably safe to say it's not dropping to 34. Now, whether there's any money at those strike prices in 2 weeks, that's a different story. Okay, this is close to 2 weeks. Before we do that, we should check on the earnings really quickly. We should check. Even though I don't do conventional earnings trades that often or haven't done that, this trade I do all the time, and we want to make sure we're not doing it during earnings. So October 23rd, that is today. So we would wait until today to put on the trade. So October, next earnings is going to be January. Right? We see that again here, October, January. So after today, we could put this trade on. It would be safe in that regard. And so 2 weeks, let's say after today, we put this on. And I guess it kind of depends. When are they reporting? They're reporting in the morning, before market hours, after market hours, during market hours. Let's just say the day is done and they reported already, so we don't have to worry about that part. We were looking at the 34 strike price. Here's 34. Look at this big S spread. That's huge. 1 penny to $2.20. Maybe you could get filled here. Not a lot of action on this particular option. Also, notice that the right now the delta seems to be a little messed up. For example, you got 47, and then it should be kind of like a smooth decrease. But we're kind of smoothly decreasing, and then you notice like 25, 23, 19. But then why does it jump to 25 to 16 to 22 to 20 to 20? That doesn't really make sense, right? It should keep going in the smooth kind of decrease down. So just something to note that during that right now that seems to be a little bit inaccurate. So maybe the option chain once the market opens, maybe something's gonna change a little bit, but it's a possibility, right? It's at least they're showing some money here versus these zeros. So in theory, we could at least try. Doesn't mean we're going to get it. We could try to get it filled on $1 on this side, and then scroll down here. What did we say? Oh, 50 over on this side. No, there's no bid. So the closest one we'd have is 48. Let's take a look at that chart again. I think 48 is safe. Yeah, 48, $52 away. It's still got to go through all that. So with Thinkorswim, 48, because I've already selected this, then I need to press down the control button on my keyboard, and that allows me to add the other leg. And it looks like the mid for both of these, selling both of those, is around 150. I think it would be kind of tough to get filled at 150. I wouldn't be shocked if I did, but I also wouldn't be shocked if I didn't. I wouldn't be shocked if I had to adjust it because this is pretty significant. This difference between 8 cents to 80 cents, but this one is pretty huge. 1 penny to $2.20. So it might be tough to get filled in the middle of those numbers, but we could put it in and see. So what we can also do now is we right click here. Let's So now here we have a short strangle. Before we do that, let's just talk about this part. What's the difference between a like cash secured short strangle or somehow that's what I call it, a cash secured short strangle. Maybe other people call it something else. I don't know. The name doesn't matter as much if you can actually pull off the thing. You can do this, do the trade, you can do the strategy, regardless if you call it something different, right? If you're able to put the trade on, you're able to execute the trade, you're able to make money, you're able to take that money and do whatever you want with it, pay for gas, take your sweetheart out for dinner, buy yourself some new socks, whatever the case is. That's what really matters versus getting the names right. But now sometimes you could do a strangle like this, and it could be considered a naked strangle. How would it be a naked strangle? Because you either don't have the money to buy the 100 shares here, and you might not have the shares to sell the 100 shares here. So if you don't have, let's say you put this trade on, and it's for me at the moment, it would require $422.10 of buying power. Let's look at a return on investment, a return on buying power, if we were to get this. So you take your buying power, 422 and 10 cents. Actually, I'm sorry, my apologies. You take the credit you received, or yeah, for this it'd be the credit you received, 152.68. Divide it by the buying power it costs to receive that credit. So you're looking at in a 2 week time, almost about a 36% return on buying power. That's pretty good. That is actually pretty darn good. Now, again, like I was saying, I don't know if these fills would go through because of the huge big ass spread on the bottom one and the big one on the top one. But this would be a good trade to shoot for. So now we're going back to if it's naked, if you don't have money to fulfill your obligations. Now, on the put side, it's pretty black and white because this put obligates you to buy 100 shares at this strike price. So it's pretty simple. Like you got the cash, you got 3,400 bucks to do that. If you don't, then that's considered naked. If you do, it's considered cash secured. Now on this side, what is the contract that you're selling say? You're obligating to sell 100 shares at 48. Interestingly enough, let's say you had $10,000 of cash in your account. That means you'd have enough money to buy 100 shares at $34. You'd have enough money to hand over 3,400 bucks for those 100 shares. Now, granted, technically, the net amount you're paying is a little lower, especially because you're receiving some sort of credit. But let's just keep those as two separate things, right? You have the money to fulfill the obligation you're committing to. You've got the 3,400 bucks. Plus, if it went through at this and you sold it for this price, then you'd have the 100. But because you have 10,000, right? If you have $10,000 of cash minus 3,400, you still got 6,000 left over, almost 7,000. So what that means is that you can be monitoring this, and if FCX starts trading, at what point are you going to make a decision to buy 100 shares to turn your naked call into a cash secured call? It does, as I was saying, it takes more management. Where would you do that at? Like for me, I wouldn't consider doing it if it's not even getting above this 42, 4270 or so. It's got these two moving averages here. If it's not even trading in this area, even like see this long wick to the top, you got the candle where it's wide, or the body where it's wider, but then you have these longer skinny things. That's called the wick or the shadow. So if your wick isn't even touching up here at 44, if it's like See how this didn't even, it's not even really, this is the closest it was getting out of from this line here, which is going in probably from a new week or so, or 2 weeks. I don't know exactly where that is. What day is that? Let's see if I can pinpoint it exactly. Okay, it's the 13th. And when was the 13th? It was like 10 days ago. So you're, so since, you know, this is what, Wednesday, 1, 2, 3, 4, 5, 6, 7, 8. So from 8 days ago, it's just basically been going down. So if it's not going to get past 42, it's at 40, it's not, it's right now, it closed less than 41. If it doesn't get past 42, then it's not getting past 43. And if it's not getting past 43, then it's not getting past 44. You see what I mean? We can go on and on by different increments like this. If it's not able to do this, then it's not able to do the other thing. So, but if you were cash securing this short strangle, that's what you do. You'd be ready to buy down here at 34, and you'd be ready to convert your naked call into a covered call, which it takes more monitoring. You have to have your finger on the pulse a lot more, but it's more secure than a naked strangle, which with a naked strangle, you don't have the money to buy the shares on the bottom, and you don't have the money to convert your naked call to a covered call. You're pretty much just like, what could you do? I mean, you could just adjust the trade by rolling it and moving around, closing it at a at a loss or at a short gain or something. But those are how you could take a short strangle and make it safer. Do like a cash secured put on one side and ready to adjust the naked call to a covered call on that other side. And then we could look over here, analyze trade. So I right click on this, left click on analyze trade, and it is pulling up at a different monitor in a weird spot. Let me see if I can. Hold on. All right, here we are. Just make a full new one. So this is showing us, what is this showing us? Let's pull this up. All right, we got a lot of stuff going on here because I actually, as you can see, I'm long. I have 5 shares that I bought at 41.38. I'm short 5 contracts of put contracts at $28, and I'm short 1 contract at $30. And then let's just take these off here. See how now it changes. Let's back down here. See how that changes this graph. Put these on here. All right, so we can see, can look at it individually. So now we don't see anything. So here's my 5 shares. What's your risk graph for long stock? It usually just looks like this. Here's the, and you might be asking like, why is it so big like that? Look at the time. It doesn't show. Oh, it does show. Look at the expiration date. It's way out in 2028. So it has a longer time. But what we can do is we're looking at the short strangle though, right? Let's go back to the short strangle. Widen this up a little bit. You can see it. Now this area, this like dark area out here, and then there's this light area in here. This is one standard deviation. So the stock is trading around right here, this 42.18, right in the middle. And one standard deviation down, one standard deviation up standard deviation through here, it's showing that it could go out here, which is it's a little more than 10%. How do I know it's a little more than 10%? Because this dotted line right here is this one, and it's showing me that it's a 10% offset. If I change this to 15%, it's going to move out here. Right, so this is more than what it doesn't do though is it doesn't change the percent when I drag it. But sometimes if I really want to know the percent, I might go like this. Go down 1%. So you're looking at about a little less than 11% uprise to the top. Movement up would be around that standard, one standard deviation. And obviously you can adjust these different things, but what I like to do is I'll do something like this. Let's see what will happen if we go to break even day after expiration. So now this moved these lines here, these price slices to like the break even. But our actual number we're dealing with is 48, selling the 48, right? 48. So let's move this all the way down to 48. Gotta click the right thing. All right, so look at this. From this line going this way, almost a little bit under 11%. So this is telling us that there's about a little less than 11% chance that in this time frame of this expiration, the FCX is going to go over $48. Let's do the same thing on, what's our strike price down here? 34. So we're going to bring this we need to bring this up. 34, bring it down. Okay, so now at 34 exactly. So about 2.5% roughly chance of it being below 34. So more chance for it to go to the upside. Look at it, changed in real time. More chance for it to go past 48 than there is for it to go below 34 in this time span. And maybe you decide, you know what, I don't want to take this risk. I'm just going to sell the short put. I'm not going to do the full strangle. You can do that. There's a lot of different ways to maneuver around, but that is how some things we could do with a short short strangle. Hopefully that was enlightening for you. Hopefully that was educational, and it's always a fun time for me to be selling strangles. It's also a fun time for me to be selling iron condors. Actually, I like short strangles more than I like short iron condors. And it's always a good time for me to be active in the stock market. Hope it is for you. And until I talk to you next time, aloha.